What if it can't be restored? What if we just need to close with the entitlement outstanding that was already used? Because remember, VA no longer follows loan limits. They don't have the specifics in place that they used to have a few years ago, like Fannie and Freddie and conventional loans. They only use a loan limit to calculate a down payment requirement. And I've given you the link here if you ever need to go check what loan limits are per county, and they are getting ready to change for next year. There's obviously rumors out there what that will be, but that has not been confirmed or made official at this point.
Yeah.
I thought I'd stop and ask questions.
Yeah, I'm sorry. Can you make the slides bigger? Because we can't see it very well here.
How's
Okay.
that?
Yeah, perfect. Thank you. Sorry.
Not a problem.
Okay.
So from what I've gone over so far about just this brief part of restoration, is there any questions? No? All right. So VA allows a veteran to use their entitlement as many times as they want, whether with restoration or not. If they're not restoring that entitlement, they do have a requirement of a minimum loan amount of $144,001, so $144,001. And yes, that $1, you can see I've underlined it, bolded, everything. It is very important. We cannot do $144,000 or less. That initial or extra bonus entitlement does not kick in until we exceed $144,000. If you are using bonus entitlement, then I recommend that you follow the requires has needs method. I know many underwriters, lenders, they have this complicated, confusing calculation, but it doesn't have to be complicated. I truly feel if you calculate required has needs, it's very simple. Required is 25% of the sales price. Very simple. Has is your county loan limit multiplied by 25% minus the entitlement used on the certificate of eligibility. Your needs would be your required minus your has. And that needs is your down payment. So I've given a few examples here. The first example is just to reiterate again, a sales price of $127,000 will never be eligible for second tier or bonus entitlement because it doesn't meet that $144,001 minimum required. So then the second example, and stop me anytime, Jesse, if there's questions. The second example, let's say there's a sales price of $375,000 in Miami-Dade County, Florida, with $60,000 of previously used entitlement on the COE. So this is assuming that one, you've looked at the county loan limit for Miami-Dade, and that county loan limit is $647,200. You've pulled your certificate of eligibility, and it shows this veteran has used $60,000 previously that has not been restored. So doing the required has needs, required is sales price of $375,000 times 25%. So we need an entitlement $93,750 for down payment. The borrower has county loan limit times 25% equals a $161,800 that VA will give to the borrower to insure this loan, to guarantee this loan. But he has used $60,000, so he only has $101,800 remaining. So if you take the required, which is $93,750, minus what he has, which is $101,800, the veteran has $88,050 remaining. Since our entitlement is greater than what is required, no down payment is required. And this veteran can purchase this home with a 100% loan to value, LTV, with no down payment required. So that entitlement does not have to be restored, and they can still continue with the purchase of this home with no down payment.
Hey, Holly, we've got a question for you here.
Sure. have to offer an assumption. They do not have to participate in that program, but that's that transaction. You'll approach that servicer, see if they offer it. They will work with certain requirements the VA has to qualify the new borrowers and offer VA the fees that are required, and then process that transaction. Now, mind you, the seller, the veteran that did close on that loan, may want to sell the home for more than what is remaining. That new borrower that wants to assume what's outstanding is still responsible for that difference in some manner. We'll have to find some way of coming up with that payment. Did that answer that question? Okay. Any other questions, Jesse, before I continue?
That's all I got in the chat right now.
Okay. Then example 3, I just wanted to make sure I gave you an example of one where down payment would be required. Again, sales price of $425,000 in Clay County, Florida. Veteran used $85,000 previously in entitlement. Again, 425 times 25%, $106,250 would be required. County loan limit times 25% equals $161,800 minus what was used previously equals the veteran has $76,800 remaining. I think you can already tell $106,250 required minus $76,800 that the veteran has equals a down payment of $29,450 that would be required. I think the importance of this and why I wanted to make sure that this was understood, this gives you an insight as to what they're going to be facing when they get into the mortgage transaction. So if a veteran is aware of this going into it, it's less surprise when the mortgage financing starts, so that they understand that down payment is going to be required, and maybe $29,000 isn't in the realm of possibility for them. So they should either 1, work on restoration if they can, or 2, look at a sales price that wouldn't require as much down payment.
Holly, we've got a couple more questions. One is a follow-up to what we had you address a minute ago, just to get clarification. So you do not have to be a veteran to assume a VA loan, is the
You
question.
do not.
Okay. We have another one here. So if a veteran has full entitlement, there is no limit on how much they can purchase 0 down as long as they qualify for the monthly payment.
Correct.
And it says our investors cap at $4 million loan amount.
There are some investors that are going to have caps, and that is up to each individual investor. But there is no limit per VA, and some investors will follow that.
What was it?
Okay.
Can I ask a question?
Sure.
Now, multiple veterans that want to buy a property, how many is that up to?
I've not heard that VA has any limitations on the number of veterans that can be on a loan, but keep in mind, because VA has their own calculations on how they're going to split the entitlement usage, there's going to be extra time needed for the mortgage process, because VA requires that they review the loan and underwrite that loan.
What I mean is, how many doors if you have 2 veterans that want to use their VA, how many doors can they purchase together? Say 2 veterans.
Okay, so I think you're talking about, can they do a 1 unit versus a 4 unit? Okay, even one veteran can borrow up to borrow on a property that's up to 4 units. Most lenders will only lend on a 4 unit. Above that, it becomes more of a commercial property, so they're going to refer that out. But for mortgage lending purposes, 4 unit, even a single veteran can borrow on that, as long as they own or occupy at least 1 unit.
Okay, so if you have, say, two veterans that buy a multi-unit, I heard, and you can correct me if I'm wrong, I heard that if you have two veterans, they could buy up to 7 doors, basically each of them living in one of the units.
So again, I think that's going to depend on the lender
Okay.
and what their restrictions are going to be on how they classify that as a single family
Okay.
property, or if they classify that as a commercial property.
Okay. Thank you for the clarification. Appreciate it.
Of course, anytime. I'm making a note as we go through this and have further conversations. We'll touch more on units and how to qualify on units and VA's specific requirements for qualifying.
So just to go back to his question, I kind of missed part of it. Are you asking like in the sense of two veterans as a couple, or not two veterans going in on an investment together?
Two veterans going in on, I won't say investment, two veterans going in on single family
Purchase.
multi-units. We'll say it that way without bringing that word in play, because veterans have to buy a owner occupied.
Right. I was just curious, 'cause I didn't know if that varied by state or if that was national, where over 4 units is considered a commercial.
I think that truly depends on the lender on how they classify it. So I've written that down. I think since there's a lot of questions around this, that would be a good topic for next month to be able to identify for you all more information.
And Holly, we do have another follow-up here, going back to the assumption loans. If someone is to assume a VA loan, what happens to that veteran's, the seller's VA benefits?
Unfortunately, until that loan is paid off, those benefits are still wrapped up and unable to be restored. Any questions on the restoration, the calculations? Any thoughts on ensuring the veteran is able to proceed?
We've got one more on that same one. If it is an assumption from one veteran to another, then does the initial seller lose their eligibility?
So the restoration is based on the initial veteran's eligibility. I believe it's been a minute since we've been in an environment to have this conversation. I believe there might be a way that VA can be requested to transfer the guarantee, but I have not looked at that process in a while. So I've written assumptions down, since that's a big ask, for next month's questions as well, to get more information.
Hey, Holly, this is Eric.
Hi, Eric.
Hey, real quick, I know with the conventional, based on talking to Jim Wallace, conventional will always be tied up with the veteran until whoever when I say conventional, not a VA buyer, because sometimes you can assume those. That will never go away until it's refied. And he believes that VA to VA. Now there is paperwork that the VA needs to transfer from one to another, and it can be tedious at times.
Correct. I agree with that statement. All right, I'm going to move to the next page. Occupancy, and I think occupancy is another one like surviving spouse, where it's often overlooked on opportunities to state that the veteran or active duty borrower will occupy the property. Of course, the simplest one is that the borrower, active duty borrower or veteran, is going to occupy the property full time. That's the obvious one. But VA gives a lot of opportunities to declare the property as the primary residence such as the spouse or children can fulfill the occupancy requirement. Obviously, if it's a minor child, we must document how this occupancy will be fulfilled. We all know a 6-year-old is not going to occupy the property by themselves. So we'll need to just address that. VA is extremely lenient on a veterans to certify statement. So when I say document how it's to be fulfilled, the veteran needs to just address it. Veterans must occupy within 60 days of closing. We always have exceptions to this. Certainly if there's upcoming retirement from active duty, and I'll address that a little bit in a couple bullet points. But I also want to point out something that's often unknown. When the veteran or active duty borrower signs their closing documents, the security instrument, so the mortgage or the deed of trust on a VA loan, does have a statement that they intend to occupy the property for 12 months. The reason behind this is meant to be an owner occupied, right? And because they can use their entitlement multiple times, they don't want the borrower, the veteran, to rack up investment properties. I'm buying this one. Oh wait, now I'm going to go over here and buy this one. It's a protection. So just a note, just keep that in mind. All in all, the VA product is one that's very, very good. This doesn't happen often. Just wanted to point that out. But oftentimes, a VA has a very, very specific piece in their handbook about this. You have a borrower or a veteran that's going to be deployed overseas. They can buy and purchase a property in the location of their permanent duty station. So we all know veterans, I think most of you know it very well, are stationed in a permanent duty station and may have a temporary deployment. They are absolutely able to purchase where their permanent duty station is, even though they cannot fulfill the 60-day occupancy rule. We just have to document it with their temporary duty orders, put those in the file. The underwriter can explain it on their underwriting worksheet and move forward. The one thing we have to do is housing for both locations must be addressed. I wrote here, typically barracks or overseas is utilized. I understand not overseas places have barracks. So any type of military housing typically is utilized in that, because most soldiers do utilize that housing that's available to them. If it's not, we just need to address it. Is there a cost? Is there BAH going to be used to offset it? What is that? So that for qualifying, we can make sure that we have expenses addressed. What if they are purchasing a home for after retirement? As long as their retirement is within 12 months of closing, that is acceptable. Again, all we need to do is document the file. When is the retirement date? Where are they choosing to retire to? Just be cautious that one way or another, we would probably know this, but it's going to affect the income that is able to be used in qualifying. We will need to document the retirement income versus the active duty income. Also, VA has a very specific section that talks about intermittent occupancy. Often we refer to this as geographic bachelor. This is primarily used when a veteran's job is not located in the same area as the home. For instance, a contractor job overseas. We must document housing for both locations, and oftentimes this may be addressed in the employment contract with the employer. Is the employer going to pick up the expense for housing? We also must address abnormal commuting costs not reimbursed by the employer. We have to be common sense on this. Is there typical vacation, what I like to say vacation expenses? All of us go on vacations every year. All of us travel somewhere every year. We are not going to make this more difficult for our veterans than we would any other borrower by getting too elbow deep in this. Just something that would be out of the ordinary. If they're going to be commuting every year back or every month back and forth, it is something that we really need to address, because that absolutely would take a toll on the ability to afford this mortgage. Otherwise, we need to just move on. So the employment contract may address this. The veteran may address this in writing. Veteran-specific rules or VA-specific rules. The veteran must have a history of continuous residency in the community. Is it where they grew up? Is it where they left before they deployed to basic training, to their first duty station? Give us the history of how this community relates to the borrower, to the veteran. And then we must not in the file by employment contract have any indication the veteran has, intends, or will be required to establish residency elsewhere. Any questions? Lots of opportunity for a veteran to be able to purchase, fulfilling the occupancy, primary occupancy rule that VA has set.
Holly, I just put something from the VA about it's called a joint loan. That's basically what I was talking about. So take a look at the joint loan that I just sent you. I shared it with everybody. That's what I was talking about. So take a look at it, and that way we can, maybe next time we can educate more on that one.
Yes. I will, I'm trying to not click past everything.
I don't want to derail you, but I thought that was important to get out there.
Yes.
Continue.
Okay.
Great stuff.
You cut out on that last statement.
I appreciate you, Holly. I appreciate you.
No problem.
So Holly, we do have a question in the chat here. It's this person who is getting out but not retiring, purchased within 12 months. So they're PTSing within 12 months, but not actually retiring.
So they're leaving the military, but not with a retirement designation?
That's
Yes.
the question. Yep.
Yes. What we would have to do, though, is understand the employment and the income in that situation. And if there's no income that we can underwrite with and consider, that's where that's going to become an issue. Any other questions?
Would you be able to use like the spouse's employment money if they didn't have like a specific like income already for where they were moving to?
Yeah, VA does not have a spouse moving and maybe going to get a job where they're moving to type consideration. So that is not something that can be considered when qualifying.
Holly, got another question here in the chat for you. Is there a time requirement for how long the veteran must occupy the property? I think you answered this, but if you could address it again, that'd be great.
Yeah, so the security instrument does state that the veteran borrower will occupy for 12 months. What I should say here, though, is we absolutely, as an industry, understand a veteran at any point active duty can be redeployed. And that is absolutely understood. The intent behind this is that they just don't go collecting investment properties. All right. So just a quick wrap up, just to keep things moving pretty easily from a start position. How is the borrower eligible? Does the borrower actually meet eligibility requirements? Has the borrower used entitlement previously? Will down payment be required? Does the borrower meet one of the occupancy requirements provided, or will they occupy themselves? I did not type that in there, but I think that one's a pretty obvious statement. And then if in doubt, you can contact the persons that I've listed on the next page for assistance. Cameron Mott is on this call. He's our Senior Vice President of Director of Mortgage Banking. Obviously, you can contact me. Happy to answer questions. And then Artis Jeffries is our VP of Residential Lending Operations Manager, Underwriting Manager. I will never promise you that we will answer 100% of everything. We may have to delegate just in sheer volume or whatever is on our plate in that given day, but you will get a response from someone. We are considering a group email box that goes to multiple members of people. I think that's probably something we'll get set up over the next few weeks so that you are ensured to have several people receiving your email and responding. So look forward to having that information for you. And that'll also help us gauge by keeping us informed. What are the questions coming in? What's the interest for these phone calls as far as topics? What do we need to make sure we're giving you so that this benefits you to the fullest? Also on this call, we have 4 loan officers. They were at your Vegas event. Some of you may have met him. You've mentioned his name. Jim Wallace is on this phone call. Nate Crow has joined us, Matt Stokes and Polly Bear. They are our initial loan officers that have been introduced. Others are going to be added as needed and are able to assist, but we have plenty of opportunity to make sure that your needs are being met, and we would love to help you in any way. And now, any other questions or anything?
Got one more in the chat for you. I got one more in the chat for you.
Absolutely.
What is the minimum credit score requirement?
So that, again, VA does not have a minimum credit score. That is, again, by lender and by investor. Our minimum credit score requirement right now is 600. We are in tests to see if we will drop that down to 580.
There is got a comment here saying that a future topic, veteran grants, if we could put that on the board.
Got it. Open to anything. You have my email address. Open to any topics. I have a list of topics that we put together, but I would definitely love feedback on something that you all would find beneficial and helpful to you.
Holly, did you see the seller required costs and specific appraisal requirements? Yeah, what do we need to consider when defending VA loans?
Let me open that up. So specifically seller required costs and specific appraisal requirements. What do we need to consider when defending VA loan for a buyer's offer? That question. I think that one's a little difficult, and I welcome, Cameron, Paul, Jim, Nate. VA allows up to 4% of costs to be paid by the interested party. That does not include closing costs. So if the market that you're in is able to support the seller paying it, and the sellers are willing to, you can have up to 4% plus the seller paid closing costs, and the seller can actually contribute part of that towards the veteran borrower credit cards that may need to be paid off for qualifying, and that is a specific topic we're going to get to. An appraisal for a VA anymore really is pretty quick. VA has very specific timeline requirements that are required to have an appraisal completed. It's typically 10 business days. As a lender, we have put into place a flow that we feel is very beneficial to getting those appraisals ordered immediately and turned as quickly as possible, and trying to get those ordered fast, in fast, so that closings can happen as quickly as possible. And this is where I say, the loan officers on the call, I don't think they're experiencing anything slow. I think we've gotten VAs turned really quickly so that they can close. I think we've seen 2 to 3 week closings as long as we can get the documents in that we need. Did that answer the question?
Holly, I got a few more for you here.
Okay.
How can agents assist in the Tidewater process?
Absolutely. So when we put in our order, we have to give a specific contact for Tidewater. That contact is usually us as the lender, so that we can be notified if there's an issue. Agents, if you are ready with additional comps, that would be extremely helpful. We have to provide that information within a very specific period of time, and it's a very short window of time, so that we can have the appraiser reconsider. If we still don't agree, we do have a reconsideration of value process we can take with the VA. In my experience, with all my years working with that VA, it does not turn the value over often. I've seen it a few times, but it's not very successful. So just being ready with comps and making sure that that value is able to be supported.
Can you do me a favor and verify the percentage of disability that's needed to waive the funding fee? This is
If VA has determined that they have a disability that they are granted, they are going to be exempt. We
Is there a
get that
specific-
from VA. So if they have given them a disability rating that they receive disability compensation for, they're exempt.
okay. So are you saying like 10% higher or?
Yeah, typically, and I am not on that side of where they mark that at, but typically it is at that 10% benchmark that they award some sort of disability rating. Cameron, feel free to interrupt, but I believe it's the 10% mark where they award some sort of disability compensation and rating.
He just jumped in the chat. I just wanted it verbal because some people obviously will miss the chat.
Oh, yep,
got
I
a
see
couple-
that now. Yep.
We've got a couple of people in here who said this basically the same thing, a couple of questions here. But I'm going to summarize both of them in here. There's one from the other chat and one from this one. But how do we convince the seller that the security and the value of a VA loan? VA loans are at times put as the bottom, they're the bottom tier of multiple offer situations. What advice would you give to selling that to the listing agents?
I think there's just a lot of myth out there still that the VAs are harder to deal with, harder to get through, harder to, and I think that the best advice I can give is that VAs worked really hard to spell that. The appraisals are sound, they're just as quick at times as others. They have very specific parameters. The SARS on the lender, the staff appraisal reviewer on the lender side, has very specific review requirements that they have to go through. They're on the veterans side, if you will. They know they should be asking questions. They should be pushing back to the appraisers when they overstep. There is a review process on those SARs that they're not doing that job. VA sends letters and asks them why they didn't. I think that the qualification factors for a veteran are more gray and lenient. So the lender themselves has more room for using underwriter determination than in the conventional and FHA world. I think that the myths of the past have been addressed very consciously by VA. Specific statements to the sellers are probably difficult to come up with if they've got their mindset, other than VA has worked very hard. There are tens of thousands of loans that close daily, weekly, monthly, that are very successful, that probably would not have closed on a conventional or an FHA loan. Call Jim, Nate, Matt. Again, welcome your feedback as a salesperson that probably is advised on this.
I think as the market
Well,
normalizes,
here
it's
and here.
going to be a little bit easier to
Yeah, you're fine.
discuss the benefits of a VA loan compared to FHA, for example. The difficult part of the last 2 years was was just strictly the appraisal. It wasn't a lot of people didn't want the VA loan. It's just the homes were selling for $60,000, $70,000, $100,000 above value. And I think they knew it wouldn't appraise. And if you couldn't commit, if your seller couldn't or buyer couldn't commit to making up that difference in cash and doing the down payment, then that was the big struggle. But one argument, but I've had a very good success rate with the VA loan during, the high price period in the last couple of years. I've actually done, I think the majority of my closings have been VA on the buyer side.
Veterans not required to pay.
One thing
the difference if they don't want
explain
to.
to the sellers is that the difference between the FHA and the VA is the VA loan, they're doing it because it's a privilege and they're taking advantage of the benefits of the VA loan, versus an FHA is somebody that might be struggling to even get a loan. So I usually just convince the sellers and sellers agents that my buyers are very financially sound. They're just taking advantage of the benefits of the VA, but the loan process has been very smooth. And the other thing too, like you said, I noticed a lot of my VA appraisals are ordered within a week.
You never have any issues with
New York
VA.
State, you're looking at
When we
45
use
days to 2 months, 60 days to close on a VA or FHA. So that helps the process out that appraisal happens so fast.
Yeah, so what we try and do with our appraisals is we try and order them the day we receive the signed disclosures back, as long as we have the full contract. So we try and ensure that that's done immediately, so we're not missing any type of deadlines. Different states have their different requirements for the contract for deadlines. So our goal is to order it the day we receive the contract back, depending on timing, of course, or within the first 24 hours.
Hey, Holly, there's another question I want you to address, but before you do that, as an agent who I would say 70% of what I do are VA loans. The best advice I can give to anybody on this is, as an agent, never assume that the listing agent really truly understands and knows what the VA loan is or what that process looks like. It is on us, one, to first educate ourselves on what that loan is and what the product is that we're using, and that our clients and that our buyers are actually what they have and what that looks like, so that you can then sell it to the listing agent, because that's the person you have to convince. You're never going to really have that conversation with the seller, but you're going to need to educate that listing agent. And it is really important, if you are in a multiple offer situation or a competitive market, to make sure that you bring in your lender into this, and have your lender make a phone call. Have them back you up, explain how strong of a buyer it is. When you put multiple sources in front of that listing agent, that seller, that explains just how fantastic this program is, how great of a buyer your buyer is, and the fact that they're just using this entitlement because it is exactly that. It's their entitlement. They're entitled to it. It's something that they've worked already for. But you have to make sure to educate the listing agents on it. Never assume that they know or understand what that is. And then the question that is in the chat is, can you explain for newer agents what Tidewater is?
Yeah, so Tidewater is where the appraiser is not able to come up with the sales price for value. So they are going to be coming in lower than what is expected. They are required by VA to issue what is termed a Tidewater notice to the lender that says, I'm not able to come in where you're expecting. Do you have any documentation to support what this list price is? So at that point, we will reach out to our agent that we have a relationship with on both sides typically, and just say, hey, we need help. Do you have listings? Do you have comparables? Do you have something that we can show to this appraiser to support why this was listed at this price? Again, they are required to give us that notice. But they only give us 24 to 48 hours to respond before they continue on with the report. Paul Hebert has a comment on the VA Tidewater to share that he'd like to be able to speak on.
Thanks, Melanie. Yeah, I get this question a lot from agents, and we've had to deal a lot with listing agents not wanting to do VA loans, or it's at the bottom of the totem pole. And a lot of it is tied in with the impression that VA appraisals come in lower more often than conventional appraisals, and then of course drives a tidewater situation. And the understanding of this, in my opinion, in the marketplace is quite flawed. And so I just want to take this moment to go over this, in my experience on it. Yes, the VA does protect the veteran, that they can walk away from the deal with their earnest money intact if that appraisal comes in low. And that is probably the main stopping point for listing agents to support their sellers in getting the maximum amount for the property. But it's also my experience that I get more conventional loan appraisals coming in low than VA appraisals. The actual VA appraisal system seems to be keeping up trend-wise, probably even better, where some of the veterans are able to go above asking price, asking for even mild seller concessions at times, and the appraisals are coming in to support those transactions. But VA also has this tidewater process, which allows the veteran, or allows the agents to get involved and support comparables to challenge the appraiser's assumptions on a low appraisal. Conventional doesn't have a tidewater process. There really is not a 2-day process to get the agents involved to challenge an appraised value. So when I get a low conventional appraisal, it's done. And yes, all the burden goes to the buyer if they've agreed to some type of appraisal gap. I've had VA loans consistently also contract VA gaps. They're telling the seller, we're going to cover this gap if it comes in. Now, legally, I don't know what that does. Contractually, if it goes to some contract dispute at some point because they changed their mind, I don't know what exactly that looks like. But we're talking about, very good borrowers with cash reserves that really want that house, that understand the marketplace, that are doing a VA loan, and they're contracting that, yeah, I'll go ahead and pay appraisal gap up to a certain amount. I've never had one walk away from that contract. And so by all of those tools, the VA loan has more flexibility in underwriting, provides more flexibility with FICO and credit situations, provides more flexibility, better interest rates, so there's lower debt to income ratios. I mean, all of these things play into a stronger loan file that's more likely to be approved on time, with a process for the agents to compete and on a tidewater situation, and provide comparables and challenge the appraisal before it comes in low. I mean, it should be the top loan. It should be higher than conventional loans, in my opinion, if you have a finance conventional offer on the table. I just want to share this.
So I did just see, I am trying to watch the chat with you, Jesse, and I did just see the comment about the pickiness of the appraisal. And I do want to say that, yes, VA looks for safe, sanitary, and sound issues with the home, especially depending on age, the lead-based paint. But again, in my course of the VA history that I have seen that vastly improve. I have seen VA really crack down on a lot of that pickiness, but they do still have their rules to ensure that our veterans, our active duty borrowers, their families are getting a home, and it will always boil down to safe, sanitary, and sound. So there's a lot of things that aren't typically what they used to be in today's world. And I would also like to say, I think our loan officers have experienced with our underwriters, our SAR underwriters, we will absolutely go back and challenge the appraiser if we see something picky that is not part of VA's handbook, which is something that the SARs are actually challenged with by VA. That is part of their job and their role. So if it's not part of safe, sanitary, and sound, we are absolutely going to go back and challenge it. But if it's something that we feel is best as part of that safe, sanitary, and sound, we would rather work with the veteran and the sellers to find a way to the finish line and put our veteran in the best home. So yeah, I agree with those rules, and I see that you just said that, and it actually gives, if we could all get in the mind frame of it, gives our veterans the best of the best and what they deserve. So I don't agree with the pickiness as it used to be.
If you don't mind, I'll jump on there too. Just as an agent, from an agent perspective, it used to be a little, and I do feel it was a little bit more difficult. It's not any worse than an FHA inspection anymore.
Yeah.
Or not inspection, but appraisal.
Appraisal, yeah. And I did see a question, Jesse, that I just wanted to make sure we responded to. Once a veteran is exempt, whether it's 10%, 50%, once exempt, they're always exempt. So it doesn't matter the rating of their disability. What else? And thank you for the recommendation to talk to Armed Forces Bank. I appreciate that. We do try and be competitive. Cameron works really hard for our sales team and for our real estate partners to try and give you some tools to draw these buyers in and make them an offer that's affordable for them as well. Okay, well, Becky, that's all I have then. I have some notes for next time. I welcome, input outside of this. You have my email address, and I really appreciate your all's time and energy on this, and I look forward to next month.
Absolutely. Thank you so much, Holly. Thank you, Jesse, for hosting this for us today. And thank you to all the loan officers that have also joined us and were able to help us understand more about the basics. And we look forward to diving in with you guys further.
Wonderful. Thank you. Have a great day. Have a great weekend.
Take care, everybody. Thank you.
Recording stopped.
Thank you, everybody.
Yeah, and those of you that are on here, you'll see that I just posted the slides in the chat, but I've also posted them on the workplace group. So you'll be able to revisit that, because that's a lot of good information.
Hey, Becky, are you putting it in the file section for the Facebook group as well?
Yeah. Mm-hmm. Or you mean the workplace group?
No, Facebook also.
Facebook also. Yeah.
Yeah, we're going to repost this in the video in the Facebook group, and we can add this to the files.
This is awesome. Thank you so much. First of all, thank you all, the incredible veterans. I really enjoyed meeting all of you at EXPCon, and that was just an unbelievable meeting we had, breakfast, and it really does take a family, and we are a family. Please feel free to reach out to me in Los Angeles area, just to pick my brain. I've done a lot with my local community with veteran resources, and I have veteran resource officers that I have connections with in LA. So I love you all, and I appreciate all of you.
Thank you, Sam. We appreciate that.
So guys, the video replay will also be in the workplace group, and then we'll post it again in the Facebook group. Okay?
All right. Thank you, everyone. Have a great day.
Thank you. Get it. We go.
Good to see you, Terry.
Good to see everybody. Let's go.
Let's go. Let's go realty.com. Woohoo!
I love it, Sam. Love it.
They're like a cup of coffee continuously.
Right here.
I love it.
Starbucks.
Homebrew.
Homebrew, that's the best way. Save that money.
Hey, guys, real quick.
Connie's throwing down the gauntlet there with Go Army.
Oh,
Go Army!
You gonna-
Navy.
It was all good until someone had to say Army or Navy.
Oh, there you go. There you
Hey, I'm
go.
Department of the Navy Marines, brother.
That's right. We're the men's department. We're the men's department. Hey, just real quick, before we get cut off, just to let you guys know, and I don't know if everybody on here is a Steak Squad leader or what, but there was a chat going on yesterday, and we determined that we're going to do the ESP Milnet updates with Deanna and Rick and everything and leadership. The third Thursday, that's not changing, of every month at 1 p.m. Eastern, but every other Thursday at 1 p.m. we're going to do like a mastermind with the state leaders. So if anybody wants to jump in on that.
Hours.
What's
Your
that?
your office hours and mastermind.
There you go. There you go. Because a lot of people are like, hey, what are you doing? What are you doing? So we're just going to use that time on Thursdays if you guys want to jump in. So we can all grow and learn from each other.
And also, if you're a state leader or just part of the Milnet, just know that we're going to be posting up a content list. So basically, we want content matter experts so that Becky can bring all of you fantastic, smart, brilliant people into our education program. Right, Becky?
That is exactly right. Yeah, I'm looking forward to it.
Deanna, can you send me the official Milnet logo? Can you send that to me? Because I can make a flag with the Milnet on it. It would look pretty cool.
Yep, we've already got that done. We can get that sent over to you.
Fantastic. Yeah, I do all sorts of video stuff, video intros and stuff. I'm sure you've probably seen some of this nice stuff. It only takes like a couple minutes to do it. So I think it would be really cool to have on our page.
Anything else we can do for you guys?
Keep being great. Keep being great. Keep changing lives. Keep on keeping on, and make those buddy calls.
Yep, that's what we need. So,
And I just posted the file for the slides in the Facebook group too. So it's there waiting for approval.
all right, and I will be adding the video shortly.
Okay. All right. Thanks, everybody.
Thank you.
You guys rock. Thank you.
Go Army!
Take care.
Hooah! Hooah!
Sam.
Have to do it before it closes down.
Semper Fi, you Army guys.
Oh, there you go. We need somebody to block us, right?
Right.
Eric and I will see you at the Marriott. Because that's where all the Air Force stays, right? See, he's not on there. I can say that.
Them be fight words, Deanna. Them be fight words.
Oh no, he brags about all of his Marriott points.
Shots fired. Shots fired.
I can do that. I'm married to him. So.
Oh, there you go.
Okay, guys. Thank you for everything. Thanks for being such an awesome family. And I think next week, is it next week? No, in 2 weeks, we have Mike Nelson teaching. The master of team building will be sharing all of his secrets.
We need to, if I can, I'd love to do a charitable gifts of real estate to nonprofit.
Okay, we'll get you on the list with Becky.
Yeah, I would love to do that because what we're doing is we're connecting nonprofits with philanthropists, and then us realtors are the ones that handle all the process. And then we have a third party, which is another nonprofit, and helps all the transfer of ownership from the philanthropist to the nonprofit. In the simplest words.
Awesome.
So,
Love it.
all right.
Cool.
Everyone take it easy and time to go back to work.
Yep.
Well, shut everybody down. Jason, Chris, anybody need anything?
No, good for now.
And, Ross, Alicia, anything I could do to help you guys out? All right. Well, Terry, get healthy and we'll check in with everybody next week. Thank you.
Thank you.
Get healthy, Terry. All right. All right. Hold on. Let me close this. Whenever you do, whatever you do, looks like we had some people watching VA loans. Let me start my camera. Okay. Now, let's change some settings here. And USB. Here we go. There we go. All right. Yeah, that's a pretty cool background. I like that. Hey, back online. We're streaming. Thank you so much for watching. We're talking about VA loans and how important they are, and pluses and minuses, and what they are, and how they can be used, and requirements. All sorts of fun stuff about the VA loans. So if you have any questions on VA loans, are you a veteran? Are you a mil spouse? Are you a family member? Let me know. You go to samsilver.net, samsilver.net, or you can call me, 661-621-5340. It is a red day, which means remember everyone deployed. I'm wearing my red. Shout out to all the veterans, military, police officers, nurses, hospital staff, for all you do. And we will see you on my next stream. Make it a great day. Have a fantastic Friday. And realtors, if you don't know, we have an incredible group called MilNet, which is our EXP military network. And similar to what you just saw, we have education and support for our veterans that are realtors and their families. There's nothing like this anywhere in the real estate industry. And we're up to 1,800 members strong in our group. And if you are military and you would like to be part of this, please let me know. You text me 661-621-5340. You can get me on my Google line at 661-418-REAL or 661-418-7325. I would love to talk to you more about what we have to offer. And that's it. Make it a great day. Bye for now.